Hey everyone, happy Monday, February 2nd. I'm Endrit Sella, and this is Capital Markets Quickie. Let's jump into what's driving the week ahead. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's dive right in. Yesterday, Sunday, February 1st, 2026, investors were already gearing up for a big week packed with jobs data and major earnings from tech, media, and pharmaceutical giants. And honestly, this week could set the tone for February. Now let's start with the labor market. The January jobs report is coming out on Friday, and it's a big one. The Federal Reserve is watching employment data very closely right now, especially after keeping interest rates unchanged last week. They're trying to balance slowing hiring with still elevated inflation risks. Back in December, employers added only 50,000 jobs, which was weaker than economists expected. Even though the unemployment rate edged lower, that slowdown raised some eyebrows. Therefore, this Friday's report could be a key signal of whether the economy is losing more momentum. Some Fed officials have already hinted that rates may need to be lowered further to support the job market. However, others remain cautious because inflation hasn't fully cooled yet. So we're still in this delicate waiting game. Besides jobs, we're also getting fresh data on consumer sentiment in February, consumer credit levels, and purchasing managers' index surveys for both manufacturing and services. All of this will help paint a clearer picture of how strong, or fragile, demand really is. Now let's talk earnings because this week is stacked. We'll hear from Alphabet, the parent company of Google, after it crossed the $100 billion revenue mark in its latest report. Amazon is also reporting, coming off strong sales growth in the previous quarter, even as it recently announced another round of layoffs. In the chip space, advanced micro devices will be in focus. Strong demand for data center chips has boosted optimism around artificial intelligence, but some analysts are starting to warn that valuations across big tech may be getting stretched. We'll also hear from Qualcomm and Palantir, which should give us more insight into how the artificial intelligence boom is really playing out behind the scenes. In media and consumer sectors, Disney reports this week. Investors will be watching its direct-to-consumer business closely. That segment grew 8% last quarter, but still fell short of expectations, especially in streaming. Uber and Toyota are also on the calendar, giving us a read on mobility and global consumer demand. And finally, pharmaceuticals will be front and center. Eli Lilly reports on Wednesday, riding strong momentum from its weight loss drugs. Its rival, Novo Nordisk, also reports this week, along with Amgen, Merck, AbbVie, and Novartis. So, overall, this week is about three things: jobs, inflation signals, and whether corporate earnings can justify current market valuations. All eyes are on Friday's labor report, big tech results, and what they mean for interest rates going forward. It's going to be a busy one. All right, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.